George Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened globally around the world and try to forecast what we may see these coming weeks. I'll show you how investors and traders may make money on our stock market. I'll show you what is hot and what is not, and what you should hold and what you should fold. And by the way, if you like the presentation, please give us some feedback. First of all, we start with what happened overseas. As you can see here, the American market, the stock market, were all high over the last 2 weeks. I show you what happened last week, and then I combine that with the week before to have a helicopter view of what happened over the last 2 weeks and try to determine the trend. However, you can see all the US market have actually reached all-time highs with those numbers, and it looks like it's moving forward in a very bullish trend. The US dollar was almost steady at 97. That's actually the index with the basket of currencies. The Australian dollar was stronger over the last 2 weeks. As you can see here, last week we had a very good week, and this morning we can see that the Australian dollar above 69 US, 69.13. We also been trading the pound, and the pound has actually been down last week by 1%. In terms of commodities, let's have a look at gold. Gold over the last 2 weeks gone up by 23 US dollars per ounce. That is 1.5% above the $1,500 US. Silver also had a very good week, and also combine that with the week before, we can see the silver has gone up by 3% over the last 2 weeks. Crude oil, the US Texas crude oil, was nearly 5% higher over the last 2 weeks, with a slight decline last week. And by the way, if you're interested to trade any of the other commodities such as soybeans, wheat, natural gas, cocoa, all you have to do is call us and we'll show you how. Now, looking at our the ASX sectors, you can see here that the ASX 200 was almost steady with a major decline last week of 1%. However, when you combine that with the week before, the market was slightly up in combination of 2 weeks. We finished last week on Friday with the index 6,669. Our ASX 200 is made up to a greater extent by 2 major sectors, the financial and the materials. The financial sector over the last 2 weeks was down by 2%. However, the material sectors was up by 2.6%, and that more or less one sector was up, one sector was down, and that's why we ended up with a very flat and major decline last week because of the financial being down by 3% in 1 week. Now, looking at our stocks, we can see here that it's mainly red. I mean, as I mentioned, we've had a bad week last week, with the exception of AMP, which was was up by nearly 7% over the last 2 weeks. Another Santos was also up by nearly 5.3% over the last 2 weeks, and Worley up 1.2%. Looking at all the other commodities and all the other stocks, BHP was up 2.6% over 2 weeks, and Rio was up nearly 3%. As I mentioned here, the financial, the materials, was quite good last week. If you look at the banks, however, ANZ was down nearly 6%. CBA was down 2%, NAB down 1.2%, and Westpac down 3.3%. Now, there are a lot of banks declaring their dividends and the financial results this week, so it'll be interesting to see what we expect from the banks. In terms of volume, we are very focused on volume because we believe when volume is up, the market is up. That is a very bullish trend. When the volume is up and the market is down, that's very bearish. So we focus on the volume with the daily and the weekly, as you can see on this chart. Volume has been going up, but when you look at the last 5 days, we find that 3 out of 5 days where the declines exceeded advances. Now looking at the weekly over the last 10 weeks, last week was the first week in several weeks where we've seen the declines exceeding the advances. So one has to look at all the fundamentals and to try to understand why that is the case. We have developed a mechanical system to help us to actually look at the past few weeks, and using the 8 indicators in the GB8, which we have designed in-house, we find that 5 weeks ago we were bearish on the American market, turning into bullish 4 weeks ago, further bullish, and very strongly bullish last week. So what does that tell us for this week? We don't have any reason to expect that the American market is going to decline substantially this coming week. And of course, we are relying very heavily on what's happening between the American and the Chinese delegates discussing the various trade agreements. Gold, we were actually bearish, and then we turned slightly bullish, and we again slightly bullish for the very aggressive and the aggressive traders. If you're a long-term investor, then we are neutral on both of these commodities, and we are also neutral on crude oil. And in terms of other commodities, we can see that because of the Chinese sitting down with the American and trying to buy more soybeans, then obviously soybean commodity is actually higher. The Australian dollar, we can see here it's very strongly bullish, and the British pound again very strongly bullish. And we have traded the GBP, the pound, against the US, and we've made some money last week, and I'll come to that in a minute. Looking at the chart for the Dow Jones, you can see on the weekly side, over the last 4 weeks, we can see green candles. And look at the daily, out of the last 6-7 days, only 1 red and the rest are green. Again, as I confirmed before, we have no reason to think that the American market is going to see a drop this coming few days or maybe this week. Look at our Australian market. I mentioned earlier that we had a bearish week last week, and again you can see that is being reflected by the indicators, which gave us a bearish signals for the financial and gold as well. Even though gold went up, we're still going from bearish to less bearish for the aggressive and the very aggressive trader. Again, remember there are some of indicators are lagging indicators and take more than 1 or 2 days to form a further prediction about the trend. Material is bearish and financial is bearish. The industrial is the strong sector that we have seen several weeks. So if you want to trade any of the industrial, you talk to us and we'll tell you which stock in the industrial sector has performed the best. This is our ASX chart. On the weekly, we've had a red candle here showing that last week was bearish, and again the last week was actually the worst days was actually Wednesday and Thursday. We've gone up Monday, Tuesday, Wednesday stationary, and then we started to come down. And by the way, the last candle on Friday, the fact that it finished on the high of the day, that may show that today we might see a slight improvement in the market. But again, based on what we can see here, we've got the parabolic stop and reverse bullish, and the stochastic was bullish. And you look at those thick lines, the purple is the 100-day moving average. The 50-day moving average is trying to cross above it, that's bullish. And both of the 100 and the 50-day moving averages are above the 200. So that's still showing slight momentum in the long term. Our mechanical system that we have designed, looking at our stocks, the banks, ANZ, bearish last week, BHP bearish after being neutral, CBA bearish, Macquarie Bank slightly bullish, Newcrest Mines bearish, Santos bullish, Telstra bearish. So I mean, if you believe in these indicators, some of them are leading and some of them are lagging, and you have to really rely on those indicators. And whilst you're focusing on the fundamental as well, you can actually get some traits about what you should trade this coming days, coming week. In terms of volume, we can see that Lend-Lease had a very good volume last week, 156% above the average volume over 50 weeks. Here, the average volume over 50 weeks was 10.9 million, and last week we've seen 17 million shares expanding or exchanging hands, and the price of Lend-Lease was slightly higher. As you can see here, actually when I say it was slightly higher from the week before. Orica is again having a very high volume last week, and so is Sydney Airport. Again, all of these increases in volume dictate to us that there must be a reason behind why the buyers are buying more of those stocks. In the mid cap, for the aggressive and the very aggressive trader, we've got the GDI Property Group, had a very high volume, and so is Index and Western Area. We've been looking at Western Areas for quite a number of weeks, continues to be higher in the volume. In the downside, Karoon Oil, Karoon Energy, nearly 800% increase in the volume. Why? You need to ask why. So we look into Karoon and try to see if there are announcements or further decline in their profitability, and there must be a very good reason why the sellers have come in and dumped Karoon Energy. Champion Iron Limited, again 242%. Okay, if you want some further advice on this, all you have to do is call us. Now, last Friday, we've seen that the Dow was up 1.1% to 27,347, and I mentioned earlier that's actually an all-time high. The S&P 500 also touched the all-time high, and so is the Nasdaq. In Europe, the Stoxx 50 index, which comprises most major European markets, was up 19 points or 0.5%. In Japan, the Nikkei was down. In China, the Shanghai index was up 1.6%. Gold on Friday was down 3.4 US dollars per ounce, but still above the 1500, which is a good sign. Silver was down 1 cent, flat. Copper was up 1.5 US per pound. That is 1 cent. That's $2.65 US cents, $2.65 US dollars per pound. The Australian dollar 69.04 on Saturday morning, and the British pound against the Australian dollar. The Australian dollar gets 53 pence for each Australian dollar. Now, looking at our CFDs, I mentioned several weeks ago, we've gone above the 7,200 from the $4,000 investment, and we were up 81.8%. However, 2 weeks ago we dropped. We had a bad 2 weeks ago, and we were down to 6,500, down from 81 down to 65% profit. And last week, last week, I told you that we were up 80%. Now, the very last week, we've actually pushed our trading. As you can see, those trades with Appen and some of the Australian shares as well. And now we are up 89.4% profit. Out of the 4,000 investment, we are now $3,574 net profit after all expenses. That is 89.4% profit. So we can't complain about what we have insight in terms of trading CFDs. If you want to learn about how to trade CFDs, all you have to do is call us and we'll help you out. Now, our disclaimer: everything I said today for you is only for general advice only. We don't know your financial circumstances, and therefore, before you take any action from anything we said to you today in this presentation, you need to actually consult with us or consult with your professional advisor. And if you have any questions, all you have to do is talk to us. And we have here my email address, george@fssecurities.com.au. And if you're ringing from overseas, you put 61 first, that is the Australian code for the country, and then you don't need the zero, so it's 61-411-259526. Now, I am available to answer your phone if you ring me approximately 10 hours every day. If I'm not playing tennis, I will also respond afterwards. So have a good week, happy trading, and I hope you enjoyed the presentation.